Chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we are.
Yo, what's up, everybody? Sorry, having some tech issues. Yeah, how's everybody doing? Hope you guys are doing well. Welcome to another day in paradise, right? It's been a pretty good week, if I do say so myself. We basically ran this whole price delivery up every week, right? We were calling moves going higher, solidified once we got up above here. But man, oh man, yo, shout out freaking Mike, by the way. Shout out freaking Mike, one of my private group students. Let me actually do this real quick. If I could find it. Where'd it go? Yeah, shout out freaking Mike, yo. $2,500. The money is real, man. See that? Look at that in the chat. Mike got his first payout, if I'm not mistaken. $2,500. Amazing. Amazing. You know, the community may be small, but the bank accounts start to talk real loud. Okay. This ain't financial advice. I'm not a financial advisor. But $2,500, it's pretty respectable. Pretty respectable, if you ask me. I mean, man, we got so many. Sebastian, passive funded account. I mean, it just goes on and on and on and on and on. It's amazing. Week after week. You know, there's something to it. There's something to this stuff. I don't know. This community, there's something to it. The things that we do, I think there's something to it, you know? But yeah, I'd love to see it. Congratulations yet again, Mike. Appreciate you hopping on still. Remember, I do recommend that when you guys have a banger week, you know, like you get a payout, or you're getting close to a payout, it's best to, you know, manage the highs. And you think about the same thing when you take losses too. You want to just like manage the lows as well. Yeah, Mike, we'll see about that. You know, to ensure that happens, again, don't forget to like the video, subscribe to the channel. If you guys get value from the content, shout out Mike and all of you guys that have been sharing these success stories. Tony's one of them too, just from the YouTube channel. It's a beautiful thing, and it's the whole reason why I'm here live every week every day in my private group. It's the reason I even have a community, because I could just be doing this stuff to myself, living my life. Yet I come and make sure that my time's available so that I can pass the blessing forward, so yeah, it's great to see. It's great to see things change for people. This industry is really difficult, but again, it is what it is. The difficulty is worth it. And even if you don't make this every month, say you only make 1,000 a month, right? Again, the same financial advice. I'm not a financial advisor. There's no guarantees. But even if it was just 1,000, even if it was 500 a month, wouldn't that be a win? That's like 1,000 or 500 bucks that you didn't have, just to sit at the chart, be responsible, and run your business. But yeah, it's worth every up and down. Don't let your current status affect you and make you think that, I'm not sure if this will be for me. I'm not sure if it'll work out. It will work out. The only difference between those that succeed and those who fail are the ones that succeed. They never quit. And, being around the right people, having the right information, developing the proper mindset. Obviously, those are big elements to things as well. Yeah, Mike, exactly. Exactly. The mindset shift from I need a Lambo tomorrow to, I'm cool with, 500 bucks a month, 1,000 a month. If I get more, that's great. But that mindset shift really, it changes everything. It really does. You got to be reasonable with yourself, So, but yeah, I can happily say, this is like the 100th plus example of students coming to this community, my private group, or just simply here on YouTube, listening to what's being taught, applying what is taught, and then whether you invest in me as a mentor or you invest your time here, your return on investment when it comes to what is offered here on this channel or in my private group comes back tenfold, And I don't think there's any mentor on the internet that goes live with the students every single day, literally. And that's what I do. Here on YouTube, obviously, twice a week. But in the private group, it's every day. So if you get value here and it's something that you're interested in, definitely go check that out. But yeah, with that being said, let's move along. So we got a lot to discuss today. And we got next week. So we're done with the first week of of December. So the Christmas rally seems to be in full effect. So seasonally, things are rapidly bullish generally because of all the commerce and many things taking place. Let me pull up this real quick. Let's use the one straight from ICT. So this is important, right? It's the beginning of the month. Well, it's the second week, but still the beginning. But you can kind of see what happens towards the end of the year. Excuse me. We got a rapid increase of interest when it comes to running to the buy side. And obviously the summer months generally lead to an issue. And then, of course, the start of the year, January, a lot of times ends up being bullish. And there's these little blips right here that do retrace. There's a saying ICT says, sell in May, go away. And that is pretty accurate because when you go look at the May price action, May going into June, you could see a pretty rapid decline after April, and then going through May. But we'll talk about more of the yearly prep when the time comes. But you want to definitely look at this if you haven't seen this portion of ICT's mentorship stuff. It's very, very worth it. to look through it. And the seasonal influences are absolutely something to keep tabs on because it's like a treasure map. You know, you want to know what price is going to do month to month throughout the whole year, quarter to quarter. Well, he graciously lays it out, at least for the Dow. And if everything is, relatively correlated when it comes to the three indices, they should follow each other essentially. But yeah, so talking about this month and last month, right? December, November, bullish. We got the Christmas rally. So the September portion is when we rolled over. Was it September? Let me go double check. I'll have to double check. But once we hit the third quarter, going into the fourth quarter, which is what you're seeing here towards the end of the year, midway through December. So that's another thing we're going to talk about. You see that there's a rapid increase of bullishness. And that's because, again, commerce and many factors in the economy. So you could see it's pretty solidly translated to the chart. And then, of course, we lost this weekly bearish breaker here, right? And I said, once that breaks, and if we could change the state of delivery on that daily order block here, right up in here is when I was already solidified that we were going to go higher, because that's a beautiful response off the order block, right? After a change in state of delivery, basically breaking the open price of a down candle, if we trade into it like that, I was going to say this is an immediate rebalance too. I guess it didn't quite get to the high, but close enough, I guess, right? And you see the rapid repricing off of it, confirming the change in state of delivery. So, and then we rode that all the way up, right? Took out these highs, got beyond this fair value gap. Since we got up above this open price, my attention was up here. I've had this level and this level outlined for literally over a month and a half. Before we got down to this area, this new week opening gap that never got really filled, I was targeting that, constantly talking about it, keeping it on the chart so your attention would be there. Price got right down into it, hit that, and I said if we break up above this, we may have to consider, if it uses it as support, we'll consider to see if it can get up above these, but fully confirmed bullishness if we can break through the 50% of this weekly breaker candle, which it did do there. And then once it closed above this response, again, had me very, very much so aiming for the buy side. And then all throughout here, my attention's been up here. I started last week. If you go back to the Sunday call, I said I wouldn't be surprised if we open up, drop down, try to target this, stay up in the upper quadrant of the wick up here. Not even attempt to really get down too much into this range because this high to that low is a balanced price range. It ended up doing that, hit the fair value gap, broke above it, another change in state of delivery, and now we've just continued to go higher. And that has been the objective ever since right here. Right, and seems as though that has been pretty accurate, if I do say so myself, right? It's been like this all year, but hey, who am I? So yeah, with what we currently see, I'm not entirely sure if we're going to be able to make all-time highs. I do think that there's a pretty solid chance, unless we get a strong displacement down into this level. Maybe it hangs around in there, but if it opens up, hopefully we could see price, come and fill in the rest of this. But yeah, if we go back to the news, we'll come back to that in a little bit. If we go back to the news, we see, that's kind of strange, weekly employment data. What is that? Estimated weekly change in number of employed people. Oh, it's okay for leaving out the farming industry. Mind you, a lot of this data doesn't really matter. It kind of does, but most of the time it's going to be used as a pump fake, right? For those that understand American football, right? Pump fake. And then just it rips the other way. We do have a rate cut this week, or a assumed rate cut. Holy, yeah, that's going to be pretty interesting. Not too sure how likely that is. But remember back in September, I think even the one after that too, but specifically the rate cut in September. If you guys recall, I literally said that that rate cut at all-time highs for the next 6 to 12 months, generally 21 straight times before that has been bullish when we're at all-time highs. And this time it did it again, right? After the rate cut near all-time highs. So 22 straight moments in price has now led to rallies for the next couple months after a rate cut takes place close to or above an all-time high for the indices. So that's pretty interesting, right? If you haven't written that down in your notes, you definitely want to, because future reference, this isn't the first time or the last time it's going to happen. And rate cuts generally drop the yields in the bond market, like the bond yields, right? It drops the bond yields. And when the yields go down, DXY goes down. And then what happens to the other assets? They appreciate, they go higher because of that inverse relationship between the yields and the bonds, and how the yields indicate or dictate or influence what the DXY does, and reverse correlate to what the foreign currencies do and what the indices do. Okay. And then that makes the bonds go higher, and the rest is history, right? It just keeps going to the buy side until there's like a retracement or liquidity pool that's taken out. So I'm expecting something similar. We don't really have any news on Monday. Remember, the things that we think about when we're looking at the economic calendar is obviously power three. If we're thinking bullishness, what could lead us to the decline to go higher, right? And if we see Monday has no news, we may not have anything that happens that's significant. And then Tuesday we do have news, right? We have it's a pretty set situation here on Tuesday. I mean, there's like unless this doesn't come out, which it may not. It's tentative, so it might not. Wow, of course the budget balance is tentative. They might let it out, of course. What a stupid thing. Ugh, it's ridiculous. Hopefully it comes out so we can get some clarity as far as where we're at. But yeah, these tentative things we may not be able to anticipate taking place. They may not. But we'll see, right? But when we're thinking of power three, if we're bullish, which I'm going to assume that we're going to continue being, we still have some targets up there. But if that's the case, I'd like to see the beginning of the week. Maybe Tuesday gives us a jolt of news. Jolt, right? Hopefully it takes out some sell side, and then we get to see some type of rallying and reverse type of behavior in the DXY. Good morning, George. Welcome, brother. I heard something about Hong Kong, bro. We have to talk about that later. You could tell me some of the details. But I heard some tragic stuff happen in Hong Kong. Praying for them. And praying for you out there in Hong Kong. Hopefully things aren't too chaotic with what happened. But yeah, so yeah, we'll see if the Monday delivery is something worthwhile. I don't really think so. Whenever there's no news, it's low probability right away. So that's what we're going to go into the week thinking. And then, of course, Tuesday, there's news. So expect some type of flurry to take place, especially if this comes out. And then we have employment cost index. What is that? That's going to be interesting. But yeah, there's news at 5:30 on that day, so we'll be up early. And yeah, so we'll see if the beginning of the week can give us that rejection, sweep out some sell side, which we'll kind of go into a little bit further when we get back to the indices. And towards the end of the week, if it was really aggressive, there's not really a whole lot down here that's going to really do much. We do have FOMC speakers talking, so it may still give us some volatility, even though they're not red. We're just going to have to wait and see, obviously. But yeah, if we're going to be bullish, we want to start the week thinking consolidation manipulation to start the week, the first couple days, and then see what happens towards, the end of like the AM session on Tuesday, Wednesday, and then going into Thursday. If these 2 days accelerate aggressively and they hit our buy side target, we're going to discuss in a little bit. For NASDAQ, we could then try to think of, potential retracement for TGIF. Like I said, we are having we have a crazy team, man. A crazy private group. I mean, it's ridiculous. Like, just left and right, people are just absolutely smashing it. It's amazing. Here on YouTube too. There was an incident, yeah. Yeah, it's unfortunate what happened in Hong Kong. Maybe you could fill me in with some of the details. So yeah, this is kind of what we have in front of us right now. So I think bullish power 3, and we'll kind of see what happens. See if the low of the week can happen on Tuesday or Wednesday. Right, and if something changes, obviously we'll make adjustments. But yeah, so moving on to the bonds. Let's go set this up real quick. So the bonds are kind of crashing down. It's ironic that this is happening again before a rate cut takes place. That makes me kind of suspicious, especially because there's such a cracking correlation. The question is, who's lying right now? Which asset is lying to us, right? Is it going to be the bonds and yields, or is it the other assets? This has been a pretty accelerated move, so maybe this has a slight influence at some point in the near future. Maybe we get a response here. I'd like to see us tap this first, then maybe get a response down a little bit. But if the bonds are tanking, it's going to make it hard for us to make all-time highs, that's for sure. But again, we're going to have to see what happens with the rate cuts, because if the rate cuts come in and they are actually a rate cut and they're not kept the same, we will probably see this accelerate. We are inside of a monthly bullish order block, so we have up until the 50% of that, until we have to start considering, we may be trying to seek some of this trend line liquidity. But yeah, so again, just to reiterate kind of what the process is for those that may be new, or those that watch a replay and still may be new. The first thing you look at when you're on a higher time frame, after you're done looking at the news, getting kind of like a schedule, I guess you could say, from the news events, you got to look at the monthly chart, or it doesn't matter where you start. Preferably you can start on the monthly chart, because then you get the major range. But the first thing you look at is the previous candle, or the current candle's high, current candle's low, and then the previous candle's high and low. And then any PD arrays that you see in close proximity, like this here, this monthly bullish order block on the monthly chart, any lows that may be in close proximity, aside from like this one here, right? There's really not much except this down here. And there's trend line liquidity, so we'll see what happens if it breaks down. Or we're gonna have to see. We do see that wicks are holding in here, so that's kind of suspect. We do see that this one as well held up pretty nicely. It couldn't even make it to the 50%, so that's something we got to definitely monitor. We do have a lot of buy side targets up there. We do still have also this monthly bullish order block. So we will see what that's going to do. And then of course we got the, oops, wrong one. Right, so we'll see what the response is here. I wouldn't be surprised if we sweep these lows, then look to go. But if we start crashing down and it breaks down below this here, right, 50% of that, and we close below this monthly inversion fair value gap, 50%, that's going to be a problem overall. Because if we're bullish, structurally it needs to be respecting bullish PD arrays. Right, so we should be able to continue, internal to external, and respect some of these bullish order blocks and fair value gaps, and continue to invert levels like this. Once that stops, we may be changing things. Right, so wait a minute. So let me look at the chat. Last week was horrible for many. Yeah, man, you can't even imagine how many messages I got. It's unfortunate. It really is. Many traders, evals got destroyed. I wish people understood how much it take to stay in the game. Yeah, being around a community like this kind of brings it to the forefront, because I'm not a lifestyle mentor. I could very easily be doing those things, but there's no point. It's not going to help you. And I don't have an ego to stroke. God strokes my ego. That's basically it. Don't really care about opinions. I don't care about looking cool in front of people. I'm not like this flashy, flamboyant individual. I live a simple life. And, the real flex is being able to have your time. Lambos and all that. Like, you really want to go broke? Spending $2,000 for an oil change? Really? Is that what you really want to do? Unless you got it like that, so be it. But, it's just unnecessary. You could be building wealth instead of, wasting money on stuff. Even if I could buy that, I wouldn't even buy it. Maybe I'd rent one, to just drive it around, see how it is. But there's more things that you could spend your money on, that, like, the memories, traveling the world, taking care of your family, So yeah, there's just so much more. And that mindset is, a lot of times why people are doing aggressive things, and bad information, bad advice, being around people that are trying to stroke their own ego, it puts people in bad positions, and their focus gets pulled away from what's truly important, which is learning the skill set, which takes time. And lifestyle has nothing to do with it. That could be a motivation or a part of it, but if it's all you're motivated by is, I need to buy a freaking Lambo, when a losing trade comes, you're going to be panicking. So, and it happens all the time. Losing trades happen all the time. The question is, do you have enough conviction behind what you're doing? Have you been taught in a way that gives you the conviction to trust what you're doing, so you don't have to keep changing things, and you could stick to what it is that you're trying to do in the face of, a couple losing trades, because they don't matter. As long as you make it so they don't matter by managing risk, losing trades are just part of doing business, in all businesses, not just trading. I don't see why it's much different. It isn't any different, but people look at it as if they got to be perfect. And, these lifestyle mentors are the ones to blame. So yeah, unnecessary pressure, absolutely. At the end of the day, we're fighting. Yeah, it's about freedom, and if you're not trading to make money to attain freedom, what are you doing? Is it really just to buy materialistic stuff? Because that stuff is great once you get it, but then, 20 minutes after, you're like, what's the next thing I can go waste my money on? Right? It just never ends. So you might as well make the money you do get, make it meaningful. Invest in memories, invest in your family, invest in yourself. Make the world a better place in whatever way you can. So yeah, so again, you want to mark off your high and low, current candles high and low, that's your current range. That's the most important liquidity at the moment. Of course, you have this stuff down here, this stuff up here, but in order for it to get down to this level or up to this level, we got to either break through the high here on the current candle with the next candle that forms, or we're going to have to break down below this low, right? This low is, because it's the start of the month, this isn't a full monthly candle yet. This is a weekly low, and that's a weekly high, right? And if we go to the weekly chart, that's what it is, right? It's a weekly high up here, weekly low. So those are your near-term liquidity that's important. This fair value gap in here is also going to be significant. I mean, we do got this one here, first and foremost. So if it closes below that, we have this low, high, and then a lower low. We have a change in state of delivery here, and another change in state of delivery here on this weekly chart. So if we close below these levels in here, it's going to definitely be something we have to continue to monitor, because that may be tipping its hand to us, given the two changes in state on this weekly chart. It may be tipping its hand to us, showing us early signs that that monthly chart is in fact going to look to continue to try to reach down for, you know, maybe the midpoint of the order block here, right? Maybe it wants to just come back to the middle of the range from this low to that high. Why this low, not that low or this low? This is the most energetic, most recent swing low to swing high that basically encapsulates a range, right? Stops taken here, right? Sell stops. Stops taken here, buy stops. And here too. And then it triggered the retracement. So from this low to that high, that is your equilibrium down here, or right in the middle right here. So it seems as though kind of blew past equilibrium a little bit. So that's pretty nice. So we'll see what happens if price can break through this fair value gap in here. We do have to consider that we have one change in state, second change in state. So in order for me to be bullish again, we're going to have to really respond to this fair value gap, stay above this one preferably, and then start to displace and break through the 50% of these up candles and disrespect this, similar to what happened on the NASDAQ on the weekly chart. Right, so it's kind of this scenario. So if we break down below, like we have here, and then we shift back above, violating the 50%, I'd be having the same perspective that I had on this, right? And then I'd be looking for another change in state to close and set us up with another run higher. But for now, we got stops taken up here. We're breaking down below this low. So we have to consider this down candles range here, along with this as well. So this down candle and this fair value gap. So as long as we stay below that, we have two changes in state of delivery. Broke down below this. We could see also for this one too, the 10-year, we're getting down below this fair value gap. We've been using that for the last couple of weeks. Well, what, 1, 2, 3, 4, like more than 10 weeks, right? Or exactly 10, 1, 2, 3, 4, 5, 7, 8, 9, 10. Yeah, it's like a little bit above 10 weeks that we've been kind of dancing around this, hesitant to get up above that high. So it does look like they've built liquidity here, so I wouldn't be surprised if it tanks targeting that. And then again, we have a low, higher high, and then a lower low. So we'd watch this down candle as well, and then see how it wants to respect that. And if it does look to displace and go lower, that is possibly going to send us into either a consolidation in the indices, or it's going to remain cracked in correlation and then just continue to rally in the indices while this just continues to drop. But the rate cuts come, right? Once they come, I'm pretty sure it's going to drop it's this that gets impacted, right? So it's going to basically, if they cut the rates, this takes a hit. Just like how when they cut the rates over here, right, back in September, what happened as a result? Tank. Why? Because the rate cut. The yields are basically the interest that come from the bonds. right, from owning the bonds. So it's the yield that you receive. That's why when people invest in bonds, they get like on average like 5% a year, right? But if they're cutting the yields, they're cutting the percentage of gain that comes from the interest on that asset, right? When you invest in it. And these assets have an impact on all the markets, right? All the different ones that we look at. So just a really easy way to understand rate cuts, what they affect. They affect other things too, like home interest and all that type of stuff, like on home loans and whatnot. But yes, that's like the easiest way to explain the impact of the bonds and yields and the rate cuts and what actually goes on. Obviously, there's deeper levels we can go. I'm not like a super genius with it, but essentially, that's what I understand about it. And honestly, in my opinion, that's really all you need to know. And mainly, when you learn a concept or learn something about like a relationship that takes place, you want to know how it affects the asset you're trading. How do you get from information to decision making? What does it do, right? What does it influence? What does it impact? And you don't have to know anything else other than that. At least in my opinion, you could, learn more and more about the intricate details, but honestly, we just need to learn what it's going to do, what it's going to cause, so we can make a decision, on the asset that we do trade. So again, it got up above this. We're basically trading into this. Breaking this high is pretty significant. So if it can continue that, the only way that I'm going to look to be overwhelmingly bearish again, considering that this high has been taken and now this is a shift, it's going to have to break down below the 50% of this, right? Low, high, low, higher high, swept out sell side, inverted the fair value gap. So now this becomes a bullish breaker here. So it's going to have to invalidate that and start raging lower again to really get back in line with this going to the downside. And maybe the rate cuts are what's going to cause that, so we'll kind of see what happens. But yeah, so we're watching this as a bearish breaker potentially. If it gets violated up there, right, if it breaks through it, closes above the upper portion of this, then we'll look to continue going higher. Otherwise, we got to monitor what this is going to do because we have two changes in state of delivery. We've inverted fair value gaps here. It's breaking down below lows, not using order blocks like it was. It attempted to here, but it failed. So, this one, right, respected, went higher, came back down, respected, went higher. And so now we're breaking through levels. So we got to be very cautious, okay? Remember, get the most recent high and low from the current candle on the monthly and weekly. And then the close proximity lows, close proximity highs. In this case, the lows are more significant because, it's going towards those levels. But if it starts coming back up, again, we have these levels up here to look at as liquidity. And it's a very easy way to see liquidity, right? I have the liquidity mapping principles, the list in my private group, but then also I have it in my free Discord. I definitely encourage you guys to look into that. And here, I'll even just throw it up here real quick. Right, very simple. If you're not part of the free community, definitely join that. Obviously, a lot of the activities in the private group and here on YouTube. But I do, I send out stuff. It's kind of hard to manage both at the same time while I'm explaining things to my private group in great detail, second by second, and then trying to copy and paste. I mean, I try my best, that's for sure. But this is essentially the liquidity mapping idea. So basically it highlights higher time frame references, lower time frame references, and just the things that you need to look at. Things to consider at the beginning of every week. I have one for the monthly as well, for every month, every quarter, and then every year, right at the start of the year. So we'll talk about that the closer we get to the end of December. But yeah, if you haven't taken a screenshot of this, I definitely recommend that you do so, okay? So yeah, and with that being said, I guess that's my opinion on this asset, right? We'll just continue to see if this can be respected. We think power 3, once it opens up, because we've displaced and took liquidity, we now want to seek potential internal or rebalancing type of delivery, and see if it can't respond to this the way that we want it to, possibly to go lower, or if this just proves to be simply a stop run that ends up rallying aggressively, basically invalidating this, similar to what happened to this here before it rallied. So that's essentially my opinion on that asset. Okay, easy enough, hopefully. And again, the bonds have an impact on what the indices and foreign currencies are going to do. So we'll see what that does. If the correlation can get back in line. It's out of whack right now. It's out of sync, which again, it's something I said was going to possibly be the case, because that's the time of year we're in when things start to act a little bit wonky. And that's why ICT takes a vacation for 3 months, because it becomes harder to reason with price. But as you guys have seen continuously, there's always something to do. And we know what we're doing over here, right? So yeah, if that's what I think with the bonds, the opposite should be true with the yields. So we've taken out these highs up here. So we'll see if we could stay above this, right? We have a high, low, higher, high. So this up candle is going to be used in a similar fashion to this down candle. Well, it's a down candle, right? So high, low, higher, high. So we will, I guess, let's see if we can find a better, maybe this candle here. I think I'll use the whole entire high here down to the low of this up candle, right? Measure that out, 50% right there. This high to that low, because we took sell side, took buy side, that should be able to act as a balanced price range, should be able to act as an order block. Yeah, we got an order block there too. So actually, let me mark that. Then we'll walk forward trying to monitor how sensitive that's going to be, okay? Then we'll see what it wants to do from there, if it could trade back into that a little bit. And then our invalidation. Invalidation will be if we can get back down below the 50%. And if you think 3 PDA rule, right, if we start from this weekly chart, we have the down candles, we have a volume imbalance, and we have the swing low. And then we have that 50% of that breaker I just outlined. So essentially, if it breaks down below this and gets too deep inside this range, it's going to be basically breaching many PD arrays. Okay. So then we'll see what's going to happen here when it gets closer to that time, if it does try to get back down there. So yeah, we'll see how sensitive this order block is as well. Let me see the chat, see some stuff going on. Yeah, Mike, that's a good point. It's like losses are like putting fuel in your car. You're losing money, but it's to a good cause. The 5 and 10 still need to take the lows. 30 hasn't taken from last week. For the, I'm assuming it's for the other one. Yeah, there's a failure in there. So yeah, again, like I said, we're just gonna have to wait and see. Right, it's breaking down a little bit. If it does displace from here and breaks through these levels up here, again, that would set up the SMT, just further amplifies the fact that this would be invalid once it breaks above this candle here. If it can. If it can't, these two will end up following, because this again is like this is like the leader, right? It's a 30-year, 10-year, 5-year. It's just like the S&P, right? The S&P is 500 stocks, NASDAQ is 100 stocks, and the Dow is 30 stocks. So the S&P has more weight, right? It's more of a weighted asset against the other ones. So if SMT forms with the two, like the Dow and the NASDAQ making like lower lows, but the S&P makes a higher low, that's a strong indication that those other assets are going to probably rally. especially if there's like a PD array or something, simply because the influence of the S&P is a little bit more weighty. So you want to see the S&P, like if there's a bullish S&P, you want to see the S&P giving you that signal, that Kraken correlation to go higher, because it's the weightier asset. Same thing if it's like the S&P has a failure swing, but the NASDAQ and the Dow make a higher high. That's a very strong bearish S&P because the S&P is making the failure swing, and it's got more weight. You know, it's a little bit more weighted because it has more assets, right? Is it more of a market cap? Possibly, right? But it just has more, right? So yeah, good observation, Fritz. When a central bank cuts interest rates, borrowing becomes cheaper. Yeah, exactly. So then the rates drop, right? So the rates get cheaper. Then it also drops the yield when they are borrowing money for the banks, right? So because the yield on the interest that comes ends up getting it becomes less, right? Because the interest is cheaper, so aka borrowing becomes cheaper because the interest is less, right? And then of course that ends up having a positive effect to the other assets, and they appreciate because business is stimulated by the interest rates being lower, or money is cheaper to borrow. So businesses give more loans, you know, versus when it's really high. Mike said, I wanted to ask you about training you work on for private group. Is this coming? Yeah, it's coming out soon. There's just a good amount of videos and making sure that I'm polishing them up. I have 7 of the, how many do we got? Let me see. Let me go pull it up real quick. Why is it not loading? Let's see what. See if I can get it to load. Okay. So I got this one done. So I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 14 more to go. So I'm trying to make them shorter too, per your guys' request. But I got to make sure I'm not missing anything. So a little bit more planning and adjustments. But for the most part, this is definitely going to come out soon. For those of you in my one-on-one portion of things in my private group, just so you guys can have like another companion to the things that we talk about. Okay. But that's going to be a very effective situation, I can tell you that. And of course, that's going to be part of the benefits of being with me one-on-one. You'll just have even more amplification. And yeah, it's going to help me keep you guys organized and be a more effective mentor, give you more resources. Kind of spreads me out a little bit without me having to somehow spread myself out because there's only one of me. But yeah. All right. Yeah. Okay. Good job, Fritz. I'm glad you understand. So yeah. So we'll see what happens in here. Again, if it breaks down below this, maybe displaces below this fair value gap, that would change my opinion. Otherwise, we have sell stops taken, buy stops taken, shift in market structure, change in state here, change in state there. So it's just continuing to go. And of course, if we overtake this, the intention will be to come up into this level up here. Right? And then, of course, along the way, we have a high here, wick here, all the quadrants. Got the high there, we got the wick here, you know, so on and so forth. And then every inversion fair value gap, we don't want to see it get taken out, because once it overlaps the fair value gap, it should act as a balanced price range. There's a little gem for you guys. As price is printing, when it overtakes fair value gaps, even if it's up here, it doesn't have to be down here at a turning point. Even if it's up here and it breaks through it, it should still be able to act as a BPR. Why? Because sell side's offered, buy side's offered. And if we're bullish, we do not expect it to break back through things that have already been balanced out if it's going to remain bullish. So it's another order flow element that is absolutely ridiculously effective in terms of clarity building for, whether price should continue to go up or not, and how you can determine if things may start to change. Okay. So that's my opinion on that. Let's actually move to the DXY. And again, we got a similar thing happening here. Well, not similar thing, but DXY has basically taken out the full levels that I've been targeting all for the last 2 weeks, from the week before last, and then this week that just passed. So what we have available here, another thing too, I actually call that the market maker sell model here when we're up here. If you go back to some of the videos back on that Tuesday, November 25th, we called the target. I said that this low, leaving it like that, turns this into potentially a retracement. That's it. Still hasn't completed it. And then bang, it just came up, swept it, hit a breaker, hit an order block, hit a gap in here. And then basically just, ripped back towards our target, fully committed to it and destroyed it per usual. So yeah, we'll see this wick here. This is something we got to monitor. That wick along with the low, higher high, and then the lower low there. We also talked about this, right? Supporting the potential turnaround. Quarterly fair value gap. I'll leave it to you to go to the 3-month chart and observe that. We did talk about this last week though. But, this response here is beautiful. We got a change in state. And if we can get another change in state by basically creating another, like an order block right here. Maybe not so big. Maybe it just pulls in a little bit. Right? Maybe just like a little itty bitty bullish candle here. And then ends up just, falling off the map. That'd be obviously the next 2 weeks, right? So maybe this coming week is going to be bullish or consolidated. We did take out this low, so external's been taken. We closed below it. So we're now going to go from stops being taken up here down to stops, because that's what basically happened. Now we got a change in state of delivery. If we can open up on this next candle, retrace, respect this order block, and then eventually displace from it while leaving the mid portion, that's a beautiful confirmation that we're going to continue and then most likely seek more of the trend line liquidity down here and start blowing out these lows here. And we got targets up for the whole move lower, right? Low there, low there, low there, low there, low there, low there, wick here, right? So all of those things can be framed out as a target, right? So in terms of where price could target, right, it would be those levels there. And hitting opposing PD arrays, if it is going to turn around and go lower, hitting opposing PD arrays like this, that's where retracements take place. Every opposing PD array on the higher time frame that price trades into, if it's bearish, like a bullish PD array, you should expect it's going to act like a speed bump potentially. And then possibly give us a slight reversal. And as long as things continue to go like external back to internal, basically trading to order blocks, fair value gaps, and then respecting them and then leaving again, taking out lows, right? If it continues to do that, order flow continues to remain bearish. So we'll see. The only way that I'll be overwhelmingly bullish again in the DXY is if we can close above the 50% up here, or simply get above the down candle in here. That'd be enough for me. Similar to how it was here, right? With this bearish breaker. It got below it, but it closed inside of it. And then we rapidly repriced and closed above the 50%. And then it overtook the whole thing. So I mean, it's only right to then start to continue going higher. In the face of this happening, that type of stuff unfolds like that, you then know that you're able to adjust and then go back the other way pretty confidently too. So yeah, again, we have the wick here. We have a fair value gap here on the weekly. We have the low here of this down candle, 50% of that down candle, and we have the order block. So when price trades back into it, if it does trade back into it, this low to that high should be treated as a BPR. And if it trades through the 50%, we're going to go higher. If not, if it just goes up, fails, like runs out of steam, and then breaks down lower again, as a result of this, we're going to continue to go lower, and we'll see price appreciate even further going through the end of December with the indices and the foreign currencies. All right, so these are the levels I'm going to be watching, and my potential objective, if it can get excited enough, it's not too unreasonable to try to see if we can't target this low here, which is this low here on this time frame. And so hopefully that makes sense. Yeah, I wouldn't be surprised if it stalls out. What's up, Chawezi? Appreciate you hopping on, brother. DXY also inside of a monthly fair value gap, inside consequent encouragement. Yeah. Yeah, that's true. Let's go take a peek at that. 50% of that wick. So yeah, we'll see. I mean, it's just a mess on this monthly chart. Remember where we came from, right? We have that breaker here. We had a market maker sell model that we walked all the way from up here down to that. If you go back and look at the videos, I did it publicly. Both higher to this monthly fair value gap and then lower. I did all of that publicly. Pretty much walked the entire market all year publicly, which is pretty amazing. And then, of course, this here, we used the breaker there, and it just kept going lower. So nothing's changed structurally on the monthly chart for the DXY. It's just we've been in a mode of rally, right? It's only right. It's right. It's been absolutely bearish on purpose to make it so exports are cheaper for U.S. suppliers or exporters. At least that was the excuse that I heard. So it's all been manipulated to do what it's doing. And the dollar's not really doing too well right now, unfortunately, with inflation and all that, printing too much money. But yeah, with that stuff aside, right, again, we just swept down below this low here. That's a monthly low that's been taken. We swept above this high, which was a quarterly high that was taken. And it's also inside the quarterly fair value gap here. And we're getting a rejection off of it. So we'll see what happens with this. If we do start to break lower again, we're going to end this quarter here. This is the current quarter's candle, December 15th or the 18th, right? Within that little parameter, that's going to be when the quarter changes from fourth quarter of this year to the first quarter of next year, right? December 15th. And then, maybe it's one of the days in between to the 18th. Just kind of depends. It varies sometimes. But in that area is when price is going to roll over. So remember, the month before, the week of, or the week before, the week of, and the week after, a quarterly rollover is low probability. Very hard times to trade because money is changing hands, right? Smart money is repositioning in more liquid contracts, right? Moving on to the next contract. Right, so volume starts to be a little bit wonky. Things start to get a little suspect, which we'll obviously walk through and be discussing. But we'll kind of see, what that's going to do. But that's the game plan. Once we get closer, we're basically a week-ish before the rollover. Okay, so again, lower probability environment. Keep your risk minimal. Don't do anything stupid. It's not time to try to pass your funded account in a week. Okay, take it slow. Don't be ridiculous. If you get, a win and, things are a little bit nice and you catch a runner, great. But aim for 20 to 30 points. Aim for 20 to 30 points. Don't be on some recklessness. Otherwise, you're going to come to me regretting it, telling me about how you wish you would have listened. So, and I don't want you to have to wish you would have listened. I want you to listen, because again, if I was to come back over here and give you all a reminder, well, we talk about works. Okay. Again, shout out Matt or Mike, Mike. Okay. Amazing progress. And it's because he listens. All the successes you see here, all the successes you see on YouTube with the people that listen to me and, spend time here and, give value as well. Yeah. I mean, there's a commonality that they're listening. They're listening, they're paying attention, and they're doing exactly what we're talking about. Not only just what I'm talking about, but what I've gathered from ICT and all the stuff that he tries to point out, all the important stuff. I mean, this is pretty phenomenal for a trader that has less than 3 years experience. I mean, this is phenomenal. Obviously, the little blips here and there of more trades than I'm comfortable with, than I'd like to see. Overall, though, I mean, this is awesome. The things that have been taking place are awesome if you listen and you do what is being talked about. I mean, some traders like Harley, I mean, just a savage. It's a freaking savage. Trade real accounts. Harley's a savage, by the way. It's one of my best students. $3,200 weeks. I mean, come on, really? $1,400 withdrawals. I mean, it's phenomenal. And again, it comes from doing the right things. I mean, it just goes on and on and on and on and on. Here's another one. Amazing, right? And this is not like a off thing. Like sometimes, no, this is happening all the time. Some weeks, some months will be better than others, but this is absolutely not a rarity. Passive funded accounts, beautiful equity curves, little blips here and there, but that's just the way it is. Beautiful equity curves, beautiful calendars. You know what I mean? $5,000 payouts, talking about quitting their jobs, right? I mean, it's just something else. I mean, this just goes on and on and on for freaking days of just the successes. And it's just amazing, And again, I'm showing you guys this to show that, some of the rules seem like they're restricting you, but they're not. Right? They're not. 1 to 2 trades a day is not restricting you. Cutting your risk after every loss, that's not restricting you. You're being a professional. You're not being a reckless gambler blowing your account like 90% of people in the industry. People don't like to hear this. They don't like to hear this. They're like, get to this or get to that. Tell me when to enter. Tell me what the bias is. All this nonsense. I could tell you what the bias is, and I do tell you guys what the bias is every single week, and I'm correct like 90% of the time, and I've proven it live every week, every day in my private group. On top of that, but that doesn't help you if you're not going to listen to the risk considerations. Take 1 to 2 trades a day, not every day, but times when your model shows up. Having a model, listening or focusing on one asset, one way of doing things while you're learning, and then progressing from there. And just taking things slow. Don't be trying to hit a Lambo tomorrow. Okay, I say this all the time. A lot of people try to say it, but they're doing it themselves. Trying to aim for $10,000 weeks when they're just not there yet. It comes with time. Sizing up comes with time, but you can't size up confidently if you don't know what the fuck you're doing. Okay, it's just the reality of things. All right, so don't lose sight of the reality. And again, people don't like to hear this. They don't stick around for it, and honestly, it sucks. Because I want to try to help people. It used to really bother me, but even if it was one person that I was able to get profitable, it's still worth being here, passing the blessing on. And I know it's not just one, bro. At least at this time, it's at least it's over hundreds of people now that have been impacted just by this small community by the things that I've shared, that I've pulled from ICT. Obviously, you got to give him the flowers too, because he is the main honcho, right? But we all can develop our own ways of using the tools. We have our own rules, our own perspectives, our own ups and downs, and it's just a beautiful thing. It really is. And again, as long as you listen to good advice, which is all I try to give here, and I don't blow smoke up your ass, so it is what it is. But as long as you apply these things or take what works for you, disregard what doesn't work for you, but still listen to the good advice, consider things that you may have not been doing in terms of risk, you will get decent results eventually. And if you don't quit, you can't fail, right? And if you stop over trading and over leveraging, most traders that have come to me, the main problem they have that's stopping them from success is they cannot stop over trading. They cannot stop over leveraging. They cannot stop being in a rush. And it's like, once they fix that, like if what I'm saying right now sticks to you and you're thinking like, yeah, man, that's me. Just do it for a week. Do it for 2 weeks. See how you feel. Take 1 to 2 trades a day. Maybe not every day, right? But when it's there, only 1 to 2 trades a day. That's it. And then keep your risk low, right? Don't do anything crazy, especially if you're just learning. And I promise you, the stress will drop. The results will increase. It'll be easier to get good results. And it's little adjustments a lot of times are what really helps catapult traders. At least that's what I've learned over the last 3.5 years helping people. It's very surprising when you figure out what actually is the problem. And most of the time, I can say this confidently, most of the time it's over trading and over leveraging, and it's expectations being too high. You got to cross one bridge before you get to the $10,000, $20,000 days, $1,000 days. You first have to make $50 a day. And then you got to make $100 a week, right? Or 50 or $100 a day, right? Or $500 a month before you get to 10,000 a month. You got to start with 1 or 2 contracts before you get to 5, okay? Or even 3 or 4. You can't just jump. You can't cut in the line. It's just the way it is. It's just one of those things, okay? So consider this stuff. It's very important because, like Mike said, this week, the amount of messages that I've gotten DM-wise, I mean, it's insane. Like, I blow my account. Please help me. I don't know what to do. And I'm like, are you over trading and over leveraging still? Regardless of what I've been saying? Yeah, I feel like I'm not going to get there fast enough. Excuses, right? And it's leading to the same results. So, I mention this stuff a lot to make sure it's always being reminded that you have to do the right things. The best of the best traders aren't taking 50 trades a day. They're not over leveraging their accounts every single time they trade. Every trade is not the end of the world if they take a loss or if they win. It's not, it's not going to change the whole trajectory just because they won today or lost today or win tomorrow or lose tomorrow. It's month to month, week to week performance that they focus on. And again, they're staying within the rules and they're not blowing their accounts and going into deep drawdown because they have to make it back, like right now. Okay. So do the right things, focus on the right things, listen to the good advice that I give you guys, that ICT gives you guys, the traders you respect are giving you, because I'm not the only one that says this stuff. But I'm telling you, if you listen to these things, stuff can change. Okay. So yeah, don't discount these things. But I hope everything's made sense so far for the indices. We'll talk about things for the indices. But the DXY here, again, we're watching the down candle here, which is right here, and this wick. We should not blow past this candle here. If it's going to be bearish, if it's going to go lower, this should be able to remain below this candle. If not, it's going to start really pushing into this up candle, and it may not be something worthwhile to continue to push down. Okay. but we'll see. Right, we got this down wick. So ideally, before it even contests the 50% of this, I want to see if we could hold below this in this weekly fair value gap 50% level. Once we get outside of the weekly fair value gap, like upper portion, and we blow through this wick, and then we take that high, that'll basically change the overall delivery for me, the interest, before I even look at the weekly chart. That'll show that the daily 3 PD arrays, the down wick 50%, fair value gap, another fair value gap here, and then that swing high gets violated. That'll be, like 4 PD arrays, volume imbalance. We got an order block here if it gets above it. So getting up above even this candle here is a real problem. It's going to have to stay below the 50% of this, stay below the 50% of this, and really show some resistance to get up there. And then hopefully it spends a little bit of time and then it continues to press lower. So that's what I'm going to want to see. I'd like to see us open up, rally up, try to contest some of that, fail to break to the 50% of that, and then start to displace, give us change in state of delivery, and then just start continuing to go lower. And again, we have these targets here. This is the previous week's low. We got the previous week's high up there. So this high and that low, that's the range we have in terms of liquidity. And beyond that, we have, again, this low here. It's a daily low. And then we have this low here, which is another previous week's low, which is right there. If, assuming price is going to use this as resistance and keep going lower. So invalidation is up above this fair value gap, beyond this 50% level. As long as we stay below that, my intention is to still try to consider seeing this potentially go lower. And all of this has also been rooted in a quarterly fair value gap delivery or response that's then blown through all these levels aggressively. So we'll see if that continues. If it does, we'll continue to see price go higher in the indices and then lower in this asset. And hopefully the bonds and yields can catch up to that and get back in sync. All right. So that's my opinion here. Before we talk about the currencies have done exactly what I said they would do as well. If you go back and look at or remember what I was talking about. So if you're a currency trader, I gave you that bias too, and it's flawlessly worked out. I mean, just you can't get better than perfect. I mean, it's been pretty spectacular delivery. I should have traded the futures of GBP. I was really considering it. But, I do enough. Let me see. Will I get a certificate when I become a lifetime member? That's a good idea, huh? That's a good idea. For those that become one-on-one students that get funded, I should give them a certificate too after they've been with me for like 6 months. Yeah, that's a good idea, Mike. I think I'll do that. I'll probably consider that. Maybe make some designs. I know you're kind of joking, but I think it's a good idea, bro. It's a pretty good idea. Fritz said, Chris, are you going to trade most days? So it just really depends. It really depends, honestly. Just depends. Things have to be showing up in price. I can't really make that determination. I've taken a very small amount of trades already. I think 2 trades, if I'm not mistaken. But yeah, on the days market, yeah, it's a holiday month. I'm probably not even going to take more than 15 trades this month, if that, maybe even less, maybe less than 10. I've already had a absolutely ridiculous year. Blew out last year, so I'm comfortable even if I stop right now and do what ICT is doing, just don't even trade the rest of the next couple months. But I love the market, so we'll see. I'm low risk the rest of the year though, like half of what I normally risk, which is 1%. I'd be able to join the Alliance for 2 weeks. I'm on leave until the first week of January. First daily calls. Yeah. Well, I mean, I will be live. I'm always be live on YouTube twice a week. Doesn't matter what time of year it is. And we'll see, right, if moves occur during the times that we're live. But But yeah, we'll just have to see what happens. And in my private group, I'm live every day, 3 a.m. every day, Pacific Standard Time. But yeah, that's dope. I'm gonna be happy to have you on the lives. That's for sure. So yeah, I will be seeing you on the lives then, brother. But yeah, so with the currencies again, once we got up above this, once it broke through this breaker candle, right? I said that price will probably look to keep going higher, and then this big wick in here mapped out as a balanced price range. Then I also mapped this high to that low because buy side's taken, sell side's taken. We broke above the high, that became a balanced price range. Then this happened, made it an even stronger balanced price range. And I said that as long as we stay above that 50%, we're going to keep going higher. And what do you know? Like Houdini, price does exactly what I said it was going to do. And it ripped people's face off really aggressively to the buy side while, DXY is tumbled. So as far as, what I think price could do here, we actually have this weekly level I'm going to pay attention to. I'm actually remove these lower things down there. So as long as we stay below, we have trendline liquidity up there. We have a high that looks pretty relevant to target. So we'll see if it can run through that. We do have an order block here. We got this order block as well. It's still kind of a mess overall. We have SMT at the lows that led to what we're seeing here. And the euro is just absolutely horrible right now. The UK is going through a whole lot of stuff. Europe, just in general, is going through a lot of stuff. So, and they're over here trying to sue Elon Musk. That's not going to go good for them. The EU, that is not going to go good for them whatsoever. The richest man in the world and they're suing a citizen of the greatest country in the world. Okay. Yeah, that's not going to end too well. So who knows what that's going to do to the economy over there? Who knows? It's definitely not going to be anything good. But maybe that's their intention. Who knows? Some of the leaders are insane these days. But yeah, as long as we stay above this daily fair value gap here on the GBP, I wouldn't be surprised given that we overtook it. This is now a balanced price range. So that's what I'm going to look at that as, and we'll see if it could stay above that. And as long as it stays above the 50%, I'm going to keep trying to push this to the buy side. We do have this high, low, higher high, and price or a failure swing, and then a breakdown below this. So we do technically have this candle. So if this candle was to hold the 50%, which at least for the moment it is, and if we respond off this too with that, and it breaks down below this, that's enough for us to understand that price is probably going to keep going lower. But we've got this SMT. We've had a strong break in the overall delivery that's basically inverted this. So again, I'm more so leaning towards the trendline liquidity being targeted in here, especially if we have continued weakness in the DXY. Just another reminder, you guys, don't forget to like the video, subscribe to the channel if you get value. Helps the algorithm push this content out to those that are just like you. So, we can save people that are getting slaughtered in the industry by these frauds, right? Appreciate you guys that go ahead and do that. If the currencies turn bearish, would indices follow? So it's not necessarily that the indices would follow them, but it just depends on what the DXY does, because that's what these are following. And of course, if the bonds and yields continue to be messed up, right, and not correlated, eventually the switch is going to be flipped where everything gets back in sync. But for now, given that the bonds and yields are kind of not doing what they generally do correlation-wise, we're going to continue to watch what the DXY and the currencies are doing, and then correlate that with what the indices are doing as well. So use most of the assets to validate, for risk on, risk off, but keep in mind that it is a lower probability environment because of the correlation with the bonds and yields. This is all happening again ahead of a rate cut. So we'll see if that changes going into this rate cut. But for now, I'm just going to stick to what price is telling me. I don't care what's happening, like overall in the world, or all these distractions. I don't care what's going on. What price is telling us, excuse me. But what price is telling us right now is that we're still weak in the DXY. Currencies are positively responding and appreciating, and then so are the indices rapidly responding. And the seasonal tendency, like I talked about earlier, the seasonal influence for the indices around this time of year up to January is pretty aggressively bullish because of commerce and all the economic activity going on. So until this changes, until we like break down below this and violate this, we'll continue to try to push this, especially because our target hasn't been fully met yet, which is since we were down here has been this target up here, especially once we got up above this, confirmed the change in state to the buy side. So yeah, this is my opinion on the levels I'm watching for the currencies. Just map that out. I don't see this coming back down and really doing anything crazy here. I do think that we'll hold this. Ideally we look to just simply go off this retracement. Maybe it comes down a little bit further to set up power 3 bullish. I don't see the whole entire fair value gap here getting filled in, and I really don't see us coming back down into here. If we do get down to there, we may have to adjust. But I do believe that this delivery in here with bearish DXY should be able to continue. Maybe open up, drop down, take it out one more time. Use this previous low, Friday's low, as a counterparty liquidity pool. Use this daily fair value gap potentially as a breakaway gap. I basically just leave it open. Maybe tap into it a little bit, but not really go beyond the 50% from here to there, right? The fair value gap. This is the portion that doesn't have any trading through it, though. It does have it over here. So again, that's another reason why it may not have to come back down into that. If it does end up continuing to hold this, again, we could look at this as a market maker buy model, right? So we'll see if that continues as well. So yeah, it's going to be my opinion on the currencies. So watch that. We've been correct up to this point, so we'll see if this all continues, because nothing tells us otherwise at the moment. So yeah, that is that with the currencies. And now we'll look at the indices real quick and put a ribbon on it. See, if we go to the weekly chart, all right, we can see how we're just continuing to rage to the buy side. And we got SMT here. Beautiful SMT that led to the bullishness. And it's just continuing to run higher, as predicted. So we will keep that assumption until proven otherwise. Let's try to clean this up a little bit. But yeah, my goals have not changed. I want to see if we can get up into here. We did peak above this high. Maybe it opens up, tries to retrace a little bit, attempt to hit this wick again. Maybe try to attempt to accumulate a little bit further in this order block, because that's what all of this was. These wicks trading into that. That's all accumulating inside of the daily order block. And again, we've inverted this. There's really nothing on this chart telling us bearishness yet. And we do have pretty logical targets up here to look to, blow out. So, yeah, so we'll see what happens. I want to see if price can open up. Maybe for the first 2 days, look to drop. Maybe this news here looks to manipulate a little bit. And then maybe that's enough for us to maybe take out some of these lows in here, trendline liquidity. Maybe it comes back down to this daily inversion fair value gap. But this here, in my opinion, is a market maker buy model. We got the consolidation, accumulation, reaccumulation, smart money reversal, first stage distribution. Now we're up inside of the second stage distribution territory. So we'll see if price can really rip towards this level up here. I don't really know how likely it is to blow out the highs, but I do definitely think that we can get up into this, at least try to rebalance some of that, and then maybe it stalls out. But the rate cuts, I do believe, will be able to get us up at least up to here. And if it blows beyond that, obviously we have the highs up here. We have relative equal highs up there. So maybe that becomes a potential target, depending on how it treats this. But I wouldn't be surprised if they spend a good amount of time in this gap in here once they reach it. In the context of this, overall is a market maker buy model. Okay, so we're going to keep that opinion. We've been correct most of the year this year. It's been an absolutely phenomenal year. I hope it's been the same for you guys. Hope, even if you've had ups and downs, you've been able to gain a lot more clarity. Let me see what's going on in the chat. Yeah, Mike, I agree. I appreciate the enthusiasm for the community and what's done here. You're definitely a testament to the good things that keep taking place. Yeah, that's a good idea. That's a good idea. Maybe like an hour and a half after the call, we can set that up. I do have a couple one-on-ones today, but it's not till a little bit later. Yeah, we'll definitely. I'll send a reminder to the group, see who's going to be available, and we'll see if we could set that up. But yeah, so let me know in the chat if everything has made sense so far as what we're looking for in the charts for this asset and all the other assets. Does everything make sense as far as what we're looking for to basically see what price is going to do? Hopefully you guys have realized that it's all very much the same every single week, and it's all very much the same of the tools that we use that continuously are proving every week to work. It's not every single ICT concept. It's not every single thing that he has ever taught, but it's things that get you down and dirty decisions, right? That are very precise, very accurate, and now at this point, publicly proven to do exactly what I claim they do, and I have students literally making thousands of dollars, which is pretty incredible. Mike being one of them. Congratulations again, Mike. Okay, George said makes sense. Fritz said makes sense. All right, well, yeah, so do you guys have any questions? If you guys don't got any questions, I guess we'll end it early today. Kind of got through all I wanted to talk about. And the title of this video is, if you're trading ICT Daily Bias incorrectly. I just basically showed you the whole process, how to validate, as I do every single week, basically giving away the process on how to analyze price, how to validate, how to know when price is going to do this or do that or not do this, not do that, Yeah, Tony, I feel like every week is a great week, brother. You got to go into every week, every day, thinking it's going to be a great day, great week. And even if it's not, it still is a great week, a great day, because, we got things that we can improve upon. You got to always be optimistic. As traders, we're some of the most optimistic people on the planet. And if we're not, you better get to being optimistic, because, negativity will manifest. And this is not a place you want to manifest negativity in, because the floor, there is no floor until you're homeless. Okay. So unless you want to, dig yourself into a hypothetical grave, like down so deeply in the depths of negativity that's even possible, I would be, changing course and trying to be positive. Those of you that struggle with being positive or being motivated or any of that stuff, um, there's ways to reprogram yourself. And I'm definitely someone that had to do that. I had to, watch a lot of positive things, get around positive people, cut off family, cut off negative people that were dragging me down because it was affecting me as a trader. It affected my happiness, my satisfaction with accomplishments, self-worth, right? All that stuff. All that stuff needs to be really focused on and very intentional. The only people you keep around you as you're learning to trade, especially when you do learn to trade, you have to be very limited with who you allow in your sphere of influence. And that includes social media. What kind of content are you watching? Is it a bunch of negative, pointless, you know, stuff, toxic stuff? Is it drama filled? That's all negative stuff. You want to have positivity. If there's things that you got to change in your life, in your personality, in the world around you, right? Make sure you're taking steps to do that, because everything that you allow yourself to consume or anything you allow into your mindset, it's either going to benefit you or it's going to take you down. So that's why in this community, it is what it is, right? That's why this community is what it is, right? It's very based on positivity, constant growth, constant uplifting of each other, supporting each other when things go wrong, supporting each other when things are going right, helping each other stay accountable, helping each other manage the highs and lows. Like Mike, I honestly, if I'm being honest, I would suggest you don't take a trade at all this week. Just sit and watch. Prove to yourself that you can sit back and enjoy what it is that you've done. You know, and all of you guys have done really well this last month or this last year. Just because I'm live, just because I'm live in the private group, just because I'm live on YouTube, just because I may point out an opportunity or point this out, point that out, or you may see someone do this or see someone do that. If you're coming off of a good streak, enjoy that. Prove to yourself that you don't have to trade every day, because you don't. We may, not being at our goals yet makes us feel like we have to be doing something every 5 minutes monetarily, but trading's not like that. You could take 4 months off, after you have like a big win streak or a bad lose streak, and you come back like a month or two later or a week or two later, and next thing you know, you're doing better than you've ever done. Because you allowed yourself to reset, you allowed yourself to not be worried about things. That's the nature of trading. It's not a normal job. You can go months, weeks without doing anything in terms of making money, and then all of a sudden it just rushes to your account because you understand what you're doing, and you're allowing the process to manifest and managing your mindset properly. And if you got all the right tools, which I give you guys, and I push you guys to basically spend a lot of time with, right? All the videos and different things, all the different advice, seeing all the motivation from all the students. It's all positive things for you. So spend a lot of time there with all these things. Compounding for better results. Yep. Everything has a compound effect, including content and people you keep around you, the stuff you allow into your mindset. Yeah, Mike, that's a good observation, bro. That's a great observation. Yeah, Sebastian took a little bit of time off, comes back and ends up crushing it. Obviously there's a lot of stuff to learn when we don't have more than about like 3-4 years experience, but that's definitely the truth. Let me see, Fritz, since joining here on YouTube, I have been able to get phase 2 of the challenge, something I have not been able to do. Wow, amazing. January 2026 will be 3 years. That's amazing, bro. That's amazing. Of the 3 years, 2 have been learning ICT concepts. And Fritz, I believe that less than even a year of those 3, you've been with me, here on this YouTube channel, spending time with us. So now, would you say that your time here has kind of sped things up in the right direction, or maybe took you off of like the wrong things, maybe allowed you to course correct a little bit if you were doing things incorrect before you started watching? Would you say that's a true statement? My time here has taken my understanding. Oh, nice. That's good to hear. It's always good to hear. Hell yeah. Hell yeah, man. Well, I'm proud of each and every one of you. This year's been spectacular, like I said. Again, hopefully everything makes sense. And in terms of process, hopefully you guys that have been with me continuously every Sunday, hopefully you understand the Sunday prep process, how we come to a determination of bias and narrative. And, hopefully you guys have been getting a lot of the gems and applying them in terms of process, in terms of being organized, in terms of mindset. Um, there's a podcast, a podcast recommendation I'd like to give to you guys called Chat with Traders. One of my mentors, he's an ICT trader, right? He manages a lot of money, like other people's funds. He has like the license or whatever. Went through that whole process. But this podcast called Chat with Traders, it's not a lot of people that trade the way that we do, but they share their journeys. And there's a lot of good things going on with the things that they're talking about when it comes to their experiences in price, how they overcome stuff, and just the struggles that they face, and you can kind of compare and contrast and see, wow, well, I'm not the only person that goes through this or goes through that. Even these people that have years, sometimes decades of experience go through very similar things that we go through on a regular basis. And they give solutions that I think is fascinating and really, really worth adding to your psychological study portion of your development. So the podcast Chat with Traders, I'm either listening to those interviews or I'm listening to ICT Twitter Spaces for psychological things every week. Tell my students to do the same. It's just a constant reminder that you have to follow the rules, and think properly and always be managing your mindset, because if you don't, you'll get lazy. And once you get lazy, bad stuff happens. Once you get, comfortable with like a win streak or 2 down on a losing streak, things start to become a real issue. Overconfidence and underconfidence. You got to constantly have a balancing act between the two. And things like that, these podcasts and stuff like that, where people are talking about their ups and downs and how they overcome them and, all that stuff. Not so much like how they trade, but the way that they talk about risk, the way that they talk about getting at a drawdown, the fact that they go into drawdown, how they think about it, how they overcome certain struggles that they face in their lives. I think that stuff is highly, highly beneficial for everyone to sit and spend some time with as a trader. So yeah, I will leave you guys with that. Let me look at the chat real quick. My time is up. No one, and I mean no one, takes the time to focus on intermarket relationships. Like, yeah, it's unfortunate, bro. And ICT has spoken on this numerous times in videos. Yet, like you just said, nobody spends as much time on this as we do. Some of the people that I listen to, obviously, some of the charter students, some of the traders that I respect a lot, they do. All these high level people do, but then again, a lot of them don't. We're like a small minority, but I think it's like 5 or 3% of people really succeed in trading long term overall, and that tells you why. Because people are lazy. They're too focused on entry. They're too focused on things that don't matter. Versus those like us who focus on what makes it easy to be confident in the trade, that it is going to in fact do this narrative or that narrative, or why or why not, you know? That's why I spend so much time on it, because I cannot sit here and guess. I'm not going to let it be up to chance, and just look at one market and just be like, nothing else matters because I'm focused here. Everything's interconnected. And if we're not looking at the other pieces that are connected, we're just like, we have half the information, even if we think we have all of it by looking at the one asset we trade. It's just a lack of understanding of how the market actually works. And it just shows you how many frauds are in this industry, because all the high level traders, they're doing this type of stuff. They may not show it, they may not be showing it publicly because, it is what it is, but they're doing it. The ones that are winning and succeeding in some form or fashion, they're incorporating other things, and there's no getting around it, because this is how you do things properly as a professional. It's not all about one market. It's not all about one concept. It's not all about one thing or another. It's about a basket of things that are taking place that allow you to make a confident decision. And that's where confidence comes in. That's where trusting your setup and bias comes in. That's where invalidation comes in. It's a big part of it. Obviously, those of you that have been with me for a while know there's more to it, but than just like, intermarket relationships, but it's a big piece to it. And hopefully the process this year, I've been able to communicate it in an effective way by doing it every single week, showing you guys every Sunday preparation. But yeah, I hope it's been beneficial this year. The backbone of the concepts. Yeah, I agree. And yeah, it's on podcasts on Spotify. It should be. It's like a green. Let me see if I can pull it up actually. I'm going to buy Sunday pudding for my family with my money I got from a friend. It feels like good. Yeah, it is. Yeah, no, it's good. And if your family doesn't know you're trading, or if they do know you're trading, when you do this type of stuff, you want to, give back to them. If they've doubted you before, right? Take like 500 of it and just like, save some for taxes, obviously. I don't know how much it is out there in the UK, but save some for taxes, take your family for a treat, and then give them a little bit just to show them, hey, this is real, because that's what a lot of people need to be able to believe in you. They need that a lot of times. And I think it's something worthwhile, especially because it's the first one. I think it's worthwhile, brother. I think it is. I really do. Because then next time you talk to them about it, I don't encourage you to talk about it all the time with them, but maybe the next time you do talk about it, they're going to remember that positive association. Oh, he gave me this and gave me that, even if it's $100, $100 each person, plus a treat, right? Taking them out to eat or something. It'll be a positive association, so you won't have any type of negativity that'll ever come from them again about this stuff, because it is real. And it is what it is. It'll get to a point where it's so undeniable that they're going to have really no choice but to think positively about it. But how the hell do I... Here is the chat with traders. This is what I'm talking about here. So definitely grab this. It's definitely worthwhile. There's hundreds of them. I think some of them are ICT traders too. but you just have to dig through them. You'll find the ones that you like, and some are going to be more useful than others, but it's good to just hear their stories from different people in the industry. Big time traders, not like these little, rinky dink people. There's people that have been there for years, decades, that even trade ICT concepts too, from all walks of life, from business owners to, retail workers, right? Working in a, Starbucks or whatever. And then just all of a sudden becoming really, really successful with it. It's amazing, from all different walks of life. Right. So yeah, I guess I'll leave it there with you guys. Again, thank you guys so much for always coming and hanging out with me. I appreciate it. Hopefully you guys get value. Don't forget to like the video. Definitely subscribe to the channel if you haven't already. If you know anybody that could benefit from this type of content, from what we do here, definitely pass the message along, spread the blessing. And of course, I do have a private group if you guys do want that one-on-one support going into next year. The one-on-one access is obviously going to be closed till the next quarter. I have a lot of stuff I have to do with 18 traders at this point. But then I do have always access available for the live calls every day. So if you just wanted to hop on those are just as powerful. They're just as powerful in terms of, you'll get value from those too. And we're in a group and we're always talking about things together. It's more of a group setting rather than a one-on-one setting. But the traders in the community are absolutely assets themselves. And I'm sure, students like Mike, he's in there, who just got a payout recently. I have so many traders in there that are worth listening to, that withdraw regularly, that are, passing funded accounts, that have been where you're at as a new trader, or, as a trader that's trying to manage success. I have those traders as well. Some that have learned faster, some that have learned slower, and then, everywhere in between. So definitely check that out if that's something you're interested in. If you like these live calls 2 times a week on YouTube, you'll absolutely love the daily live calls that I do every single week, every single day, aside from just the 2 that I do here on YouTube. Okay, so yeah, with that being said, God bless each and every one of you. Hopefully you guys have a very blessed Sunday. And I will see you guys again here on YouTube on Tuesday. So I believe the 9th, if I'm not mistaken. Yeah, I'll see you guys on the 9th at 5 a.m. 6 a.m. All right, we'll go live at 6 a.m. And those of you in my private group, I will see you guys potentially a little bit later today. We'll do some back testing, and if not, I'll definitely see you guys tomorrow morning, bright and early as always. But yeah, with that being said, God bless you guys. Appreciate y'all, and have a wonderful Sunday and a good rest of your weekend, and I'll talk to you guys soon. All right, take care, beautiful people.